Welcome value hands to another daily horizon view. Today is Friday the 13th. Ooh, spooky. As always, we will be looking at the ASX exchange traded funds. This is my little top 5 roundup. Spotlight today is fuel, which is the BetaShares, a global energy companies ETF, currency hedged. Stick around for that one at the end. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Okay, let's dive right into the top 5 ETFs percentage rise for today. Our top riser here was ETPMPD. Followed up closely by UBJ, then IKO, then QCB, and last spot there is CNU. So for those who've forgotten, ETPMPD is the ETFs. Physical palladium ETF backed up by physically allocated palladium held in the HSBC Bank in the United States. We saw a rise here of 2.05%, which equates to $4.46 on a pitiful low volume here of 5 measly shares traded in this one. Not much to see there anyway. Okay, let's cast our eye over the top 5 ETFs by percentage falls today. We're looking at GDX, O, MVR, QR, and fuel, which is the spotlight today. Hang around and get a deeper dive on that one. So GDX is a VanEck Vectors Gold Miners ETF, and that tracks the NYSE ARC Gold Miners Index. This one, I think from memory, is the largest ETF traded on the Australian Stock Exchange by market cap. The market cap is roughly $16.2 billion. We had a fall today for GDX of 1.76%, which equates to 71 cents on a reasonably strong volume of 27,500 shares traded. Okay, let's take a deep dive into the top 5 ETFs by dollar rises. Number 1 here, ETPMPD, IB followed up there closely, IKO, IZZ, and finally ETPMPT. So these metal orientated ones have been up and down the last few days or last week. So ETPMPD is the ETF Securities Physical Palladium ETF, and that's backed by physically allocated palladium in HSBC Bank in the States, as mentioned previously. Market cap of roughly $2.3 million. Pretty shitty volume there, low, so five shares traded, as we touched on before, up $4.46, which equated to 2.05%. Okay, let's take a deeper dive into the top 5 ETFs by dollar falls. Up first here we saw GDX, QR, ILB, MVR, and O. So as we touched on before, GDX is the VanEck Vectors Gold Miners ETF, and that tracks the NYSE ARC Gold Miners Index. This is the largest ETF traded on the Australian Stock Exchange, $16.2 billion market cap. We saw a fall in the share price today of 71 cents, which equates to 1.76% of the share price. Pretty healthy volume run through today. We saw 27,500 shares traded. Okie dokie, so the top 5 number of trades. We saw VAP, VAS, VHY, IAF, and STW, so no major surprises here in this list. So VAP is the Vanguard Australian Property Securities Index ETF. Market cap of roughly $1.3 billion. You get a healthy yield if you decide to purchase this one of roughly 5.17%. Morningstar give this gold, which is effectively 5 out of 5 stars. We saw 446 trades today on the upside because we saw a increase in the share price of 38 cents, which equates to 0.42%. I own this one as part of my income portfolio, so this is a good one to have a look at. Let's move along now. Okay, top 5 ETFs by volume today. We saw IHVV, IVV, AAA, STW, and VAF. So IHVV and IVV are effectively brother and sister. So the only difference between IHVV and IVV is IHVV is currency hedged to the Australian dollar. So yeah, just IVV is the iShares S&P 500. As mentioned, it's hedged to the Australian dollar. So you know, if you're investing in that one, you are picking up the 500 largest cap stocks in the US market. That one has a market cap of $166,700,000. Dividend yield is not too bad for an international ETF, 2.81% roughly when I checked it last. Has a Morningstar rating of gold, the gold star rating, so that's a 5 out of 5 stars. Volume here, we're looking at 137,900 shares traded on the upside because we saw an increase in the share price of 55 cents, which equates to a 0.15% increase. So, you know, if you know your codes, you're looking at America's back in flavor a little bit here just by looking at the volumes going through for IHVV and IVV. Moving along. Okay, so top 5 ETF today by value. IVV, no surprise there. IHVV, no surprise there. STW, no surprise. VAS and AAA, no major surprises there. Just looking at the volumes and the number of trades before the 2 previous screens. So IVV is the iShares S&P 500 ETF, and that one will track the yield of performance of the 500 largest cap stocks in America. This one has a market cap of $3.2 billion or thereabouts. You get a dividend here of roughly 1.67%. Morningstar gold rating, which is 5 out of 5 stars. So value wise, we saw $56.2 million of shares traded, or value of the shares traded today on the upside, because we saw an increase in the share price of $2.07, if I can get the words out right, and that equates to an increase of 0.47%. Not too bad. Flavor of the month back in for the US stocks. Okay, let's take a look at our spotlight today, which is fuel. That's the BetaShares Global Energy Companies ETF, currency hedged. So investment objective of the fund is to track the performance of the index, which is what we typically look at with all these. Provides large exposure to global energy companies. Hedged to the Australian dollar. Why on earth would we even look at this? Provides simple, cost-effective and transparent exposure to the largest companies in the global energy sector, predominantly fossil fuels though, mind you. So tactical exposure to global energy sector, a core component of a global equities allocation, providing transparency and diversification benefits. So, you know, you could use this as part of your diversification strategy. Would I bother? I'm not sure. We'll discuss that in the next slide or two. Okay, net asset value, when I checked, it was $5.51. Last closed on Friday the 13th at $5.41. We're looking at a market cap here of $20 million, $20.8 million if we can get my words out right. Management cost of 0.57%, so just over 0.5%, not too bad. You get a distribution here semi-annually, January and July. Dividend yield is pretty low though, so you're only looking at 1.35%. You can get better returns in other places for less risk. So, I mean, I see big issues for the oil and gas industry, and the main issue is that 93% of the world's carbon capacity is already used up to 2040. So this means that there is very little space for future fossil fuel projects to be developed over this period without contradicting international objectives around climate change. So for me, this one's a real climate change focus, and I don't think that the investment case is that strong. So as technology advances, renewable energy is likely to become even cheaper and more efficient, while battery storage will also become more efficient, user-friendly, and therefore ubiquitous throughout our lives. So you start to see things like microgrids and just more people with solar panels and Tesla battery banks and those type of things in their house. So the IEA, which is the International Energy Agency, has warned that potentially $1.3 trillion of oil and gas assets could be left stranded by 2050. So if the fossil fuel industry doesn't adapt to greener climate policies. So I think this is one of the big issues with me, looking at the overall megatrends. So the trend is away from fossil fuels. So should we really be looking at investing in companies that are involved in fossil fuels? I think quite possibly no. I think the writing is plainly on the wall, and it's running against fossil fuels as an industry. Maybe have a look at my video on ACDC. You can click on the little card here up on the right hand corner. Another option is have a look at ethical investments as well. So I've done a video on that as well, so you can have a look at that. Yeah, so I think there's better alternatives, and I think we'll have a look at the performance here on the next slide. So I think as a pure investment, I think when you look at the performance, I just don't think it's there. So this fund's been running since the 1st of July 2016. I think the performance just doesn't back it up. 3-year, you're looking at over the three years, you're only looking at 2.05%. Since inception, 3.29. So you want to have your investments in something that's performing much better than that, in my opinion. Looking at the top 10 holdings: Chevron, Exxon, Shell, BP, Total, Enbridge, never heard of them. A bit more investment there in Shell, ConocoPhillips, Petrobras, and Suncor Energy. So I think those companies really have a big challenge in the next 10 to 30 years of changing over their business models, in my opinion, because I just don't think that they have a sustainable business model. And looking at the performance of this ETF, I just don't think the performance is there either. So I couldn't really recommend that you even do much more research on this one, to be honest. But anyway, that's just my opinion. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational. and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.